Welcome back to my YouTube channel. My name is Nero. Today we are going to talk about something that I believe every trader needs to understand before they start looking for complicated strategies, indicators, or setups. And what I'm talking about is actually market structure. Some people call it the only trading strategy you will ever need. I would rather say that market structure is a framework that you can build an entire trading strategy around. And of course, this video is not a financial advice. Nothing in this video is a recommendation to buy or sell any stock, security, currency, or other financial instruments. This content is for educational and informational purpose only. Always do your own research and consider consulting a qualified financial professional before making trading or investment decisions. So in this video, we are going to break down market structure and, more importantly, how price actually move from one point to another point, right? This is based on some of the most basic principles of market action, and by the end of this video, I want you to look at the market differently. I want you to be able to look at the chart and identify the real structure behind the price rather than simply reacting to every candle that appears on your screen. I'll give you a simple framework that you can apply across different time frames and markets: forex, crypto, futures, stock, indices, and more. You don't need 10 indicators on your chart. You don't need to keep jumping from one strategy to another. You need to understand what price is doing. Now, I am not telling you to blindly take everything I teach and start risking money on it. I want you to take this information, study it, backtest it, journal it, and see how it performs for yourself. Then, if you already have a strategy, you can incorporate market structure into your existing approach. And if you are still struggling to find a strategy, this framework can give you a foundation to start building from. Because at the end of the day, strategy is only as good as the trader executing it. The first thing I want you to understand is the nature of the market, how price moves. A usual way to look at the price action is through two recurring phases: expansion and pullback. During an expansion, price is moving strongly in one direction and creating new structure. Then, instead of continuing in a straight line, price often retraces or pulls back. That pullback gives us information, and this is where things becomes interesting. A pullback is not automatically a reversal. Sometimes it is simply the market taking a break or a breath before continuing in the same direction. So inside that pullback, we can start looking for clues about whether the existing trend is likely to continue or whether the structure is beginning to change. Once the pullback is complete, a new expansion may begin. And this brings us to the important question: how does a pullback begin? And how do we know when the pullback actually ended? This is where understanding market structure becomes extremely important. So, how does a pullback start? First of all, if you look at this picture on your screen, you will see that we have the external break of structure and another break of structure. Then we can see that we have a change of character. Then a change of character means that the market has changed direction, and now we have a break of structure. Also, you can see that we have the internal structures giving us a break of structure, a change of character, a break of structure, and so on and so forth. So a pullback will start if we have a break of structure. A valid high pullback will start whenever the internal structure changes in the opposite direction. So after we have a break of structure, this internal structure shifts bearish, then you know that the pullback has started. But that is not the important part. The important part is to know when the expansion is going to start. That means when the pullback is going to end. So we are pushing to the downside and the pullback is about to end. You have to wait for the internal structure to shift bullish in the opposite direction for we to know that the pullback has ended. So when we shifted bullish, as you can see, the market then started pushing to the upside, respecting internal structures to the upside, until we take out the high over there. Now, the same thing happened after we got a change of character. To establish the low of the change of character, the internal structure have to shift bullish first. When we had a shift of structure, we identify that this is a low here and this is the high here. Therefore, we want the internal structure to shift bearish to confirm the pullback has ended, so we can get in and get the sales for the expansion. So we continue pushing to the upside and the market changed character here. Then is the right time for you to get into the sell right here and put your stop loss above the high right here, and you hold for TP to the low. And also for this approach, we primarily be using the daily time frame and the H4 time frame. Although there will be situations where we can go lower, such as the 1 hour or the 30 minutes time frame. For example, we can use the swing structure of the daily time frame to establish our broader directional bias. Then we can use the internal structure on the lower time frame. We can use the internal structure on the lower time frame to look for potential entries that aligns with the higher time frame contents. So essentially, higher time frame equals contents, lower time frame equals execution. The higher time frame helps us understand the bigger picture, while the lower time frame can help us refine our entry. But remember, a higher time frame bias is not a guarantee. It is a simple part of our analysis. The market can always do something different from what we expect. So what do I mean by using the internal structure to look for entry opportunities? Now, this is a swing high, that is a swing low. We follow the internal structure. If the internal structure shifts bullish, we change our bias and we start looking for buys. And if we have a new break of structure, we wait for a retracement and we look for buy. Now, if this is a daily time frame internal structure, this daily time frame internal structure will be an bigger structure in the H1 or in the H4 time frame. As you can see in the right side of my screen, this daily time frame internal structure over here, you can see it's a much more bigger structure, and it's the same thing that happened on the daily swing structure, where we have the H4 swing structure giving us a break of structure. And as you can see, we waited for the internal structure to shift bullish again. We wait for the internal structure to shift bearish to identify that the pullback has already ended. Then we can take our sell and hit our TP to the downside. So you have to go and backtest this, go and look into the market and see that whatever I'm saying right now is working, because this is indeed what is happening in the market in every time frames. Everything that is happening on the higher time frame on the daily here is happening on the lower time frame on the H1. So this daily internal structure is a much more bigger structure on the H1 and the H4 time frame. So what you are going to see here on the higher time frame is the same thing I want to see on the daily time frame internal structure, which is the H1 swing structure. Do you understand? So as you can see, this is the internal structure and how it looks like in the 1 hour. So this is Nasdaq, and this is the pure example of what I just taught you and how this market pushed to the downside. And this is the recent price action. You can go and check it out after watching this video. Now, understanding the market structure, I said that after a swing change of character, we want to see the internal structure shift in the opposite direction to confirm that the pullback has already started. So Nasdaq shifted bullish here, and how does the pullback end? The internal structure have to shift bearish again. So we first of all shifted bullish, and as you can see, we shifted bearish right there. So how would you have gotten a trade using this internal structure, like I said, we are going to go to the lower time frame and I will show you what happened right here on the H1 and the H4 time frame and how you would have gotten an entry using this same market structure that I just taught you and understanding this pullback and continuation. Now I want you to look at my screen. As you can see, on the other side we have the daily time frame. On this other side we have the H4 time frame. Now I want you to look at when this pullback ended and the selling that took out the external low. Where did it start and how did it start? If you pay attention, you will see that after that break of structure on the H4 time frame, you can see that we have a much more bigger swing structure, right? Now, until this time frame changed bullish, this market did not sell to the downside. The market first of all sell to the downside, but later reverse and take out that high. Why? Because the market also shifts bullish in the opposite direction. So this market shifted bullish, confirming the low, and therefore now we have a new high and we have a new low here. So the market, after shifting structure in the opposite direction, as you can see, we shifted bearish again. Only when we shifted bearish, we gave this change of character, did we start selling to the downside to take out this external structure. So let's say you understand this market structure. What you do is you can have your entry above this high. Let's say maybe this breaker block right here. You have your entry above the high. Put your entry above the breaker block. Then you can use this high as your liquidity. Wait for the market to change structure. If you're a more conservative trader, you take your trade with a change of character, or you take your trade directly and put your stop loss right above the main high, and you're going to hit TP right here. But as you can see, exactly what I said in the diagram, the market will only move when it has done something like this. It will have to change structure to the upside, confirming the low of the high, and it will change structure to the downside. Now, this change of structure to the upside now will give trader false information that, okay, this market has shifted bullish. This market is going to start pushing to the upside. But once you understand how market structure moves, you'll be able to position yourself rightfully in the market. And whenever we get a change of character to the opposite direction, you take your trade and you have your stop loss at a much more safer place. Now, this is another example, the continuation. So it will not look as if this thing I'm teaching only happened once. Now, as you can see, we had that break of structure on the daily time frame right here. We got a retracement and we sold back down. But on the lower time frame, you will see something different. Now, I want you to pay attention to the way this market broke structure. As you can see, this high was the last high that broke structure. The market did not sell back down until it retraced back up to take out that high, giving us what? A change of character in the opposite direction. And as you can see, after that high got taken out, we changed character to the downside before the sell starts pushing to the down, pushing lower. Now I want you to look at this chart. This is GBP USD, and this is the naked chart, and I am sure that you will not be able to identify this market structure right here. If you look closely, you see that sometimes when the market is pushing to the upside, for some reason this market will sell back down to take out buy stops or people that are buying the market, and it will continue pushing to the upside. But if you look at the next slide, you can see this market structure and exactly the diagram I showed you. First of all, we had a change of character, and pay attention to the internal structure. Only when the internal structure shifted bearish did the pullback started. And once the pullback ended, it gives another break of structure. The internal structure shifts bearish again. The pullback started, and we have a new break of structure. The internal structure shifted again. The pullback ended, and we went to the upside. This is how the market was pushing to the upside, and most times people will get stopped out in the market whenever we have this pullback starting, because they will feel like, okay, this here is a change of character, so I should look for a selling opportunity, not knowing that this is just only a pullback to start pushing to the upside. Right now, if you look at this other place, you see that the market gave us a change of character right here. Then only when this market went back up to give a internal shift in structure in the opposite direction did this high created a new low, which is now this is the high and this is the low that started the pullback. We are waiting for the market to shift bearish, and now as you can see, the market shifted bearish and the market continues selling to the downside. So as traders, how do we take advantage of this? There are so many opportunities here. You just need to pay attention to the swing structure and the internal structure. Like I said, the swing structure is only for directional bias, but the internal structure is where the action happens. Now, as you can see, the first circle I drew there, you see that there were 3 opportunities. If this is the daily time frame internal structure, on the H1, it will be a much more bigger structure. And I want you to go and backtest this and look into this internal structure and tell me if you are not going to see an opportunity on the 15 minutes or the 30 minutes time frame using the daily time frame internal structure as your direction. As you can see, the other circle I drew, you can see their internal structures entry. This way you can take a trade with the internal structure and also take a trade with the external structure. And this is how you use market structure. Whichever strategy you are using, you need to understand this. Pay attention to the internal structure as well as the external structure. Why the internal structure is selling to the downside, you follow and you start selling. And whenever the internal structure is pushing to the upside to change character, which is what happened here, you follow the internal structure to change the character. If the internal structure is ready for a pullback, you follow the internal structure to go down. And when the internal structure is ready to push to the upside, you follow the internal structure and you push to the upside, giving us a new swing break of structure. And this is how you use market structure, both internal structures and external structure. So before we finish, I want you to remember one thing. Trading is not about being right all the time. It's about being disciplined enough to accept when you are wrong. The market does not care about your last trade. It doesn't care about how much money you lost yesterday. It doesn't care how badly you want to win today. Every new setup is simply another probability. Your job is not to control the outcome. Your job is to control your execution. Once you truly understand that, trading starts to become less excitement and more about the process. You stop chasing, you stop revenge trading, you stop forcing setups, you stop trying to predict every single move, and you start waiting for your edge. The professional trader doesn't ask, how much can I make from this trade? They ask, does this trade meet my rules? And am I comfortable accepting the loss if I'm wrong? The mindset can completely change the way you approach the market. So you need to first of all fix the mindset. If you found this video helpful, make sure to like and share it with other traders who might benefit from understanding market structure. If you want to learn more, you can also join my free Telegram community, and you can follow all my other social platforms as well. Thank you for watching. Stay disciplined, stay patient, and remember, the market will always be there. You don't have to trade every opportunity. I will see you in the next video. Botch.